obviously the economy is doing very well, and we saw that echoed with the earnings results from companies that have continued to, report great earnings. I'm really confident about the economy, the momentum, the second half holding up. I think we're going to see growth 3%, which is something that we haven't seen since 2006, to see the kind of growth we had in the first half of the year, more or less trend sustained into the second half of the year. I'm very encouraged by what I'm seeing domestically.
Michael, do you agree, and do you think the earnings picture has followed up the strong macroeconomic data?
Oh, sure. There's no question. You're looking at the second quarter numbers are pretty much in the books now, and we've got 24% earnings growth on almost 10% revenue growth. What's surprising is that those numbers are stronger than the first quarter, and I think that's something that caught most of us by surprise. We were expecting about the same or maybe slightly lower than the first quarter. The real challenge for us is, hey, the market still hasn't gone past its January highs despite a real pickup in earnings. What's holding it back?
What is holding it back in your eyes?
I think the key thing is that there's a fear that you can never predict peak earnings growth. You never know when it's going to start slowing down. It's not provable until it's past. And I think people are afraid of paying up for earnings right at the top of the cycle. But the fact is that, as Michelle said, the economy is looking at its first 3% year in a long time. We see all the leading indicators are still positive. Credit quality is outstanding. Earnings quality is outstanding. There's really nothing right now that's telling us a recession is imminent or even that a major slowdown is imminent. So I think we should be seeing the markets continue to power higher.
Chris, what about your view on equity markets? Is it time to start to rotate into slightly more defensive sectors?
Well, I think there's some value opportunities. I agree with the other guests that 80% of the companies reporting have beaten, more than 80, and you have the best quarter in the 16-quarter presidential election cycle up, on average. And I think with all the guidance that I've seen go up, I think the fear of an earnings peak is a little overdone. But I think it is time to rotate into some value names. To me, the internet stocks, in particular, social media, look to me like they're kind of in the rearview mirror. I think they're about done, and it's time to look at cheaper opportunities.
One of those is Verizon. Is that right, Chris?
Verizon with a 4.5% yield. And the big story about Verizon is, unlike AT&T, they didn't go out and make an acquisition, or Vodafone for that matter. They actually sticking to their knitting. They're rolling out 5G. It's our chance to catch up with China as far as 5G is concerned. It's huge. It's a big change for, we want to get streaming video and everything faster and better. 5G is the answer. Yes, I definitely look at Verizon.